Welcome back to Stock School Daily.
Bitmine is putting Ethereum founder Vitalik Buterin and OpenAI CEO Sam Altman in the same room.
At the same meeting.
I mean, just think about that for a second. The architect of the decentralized web sitting right next to the guy driving the centralized AI boom.
It's an incredibly powerful image.
Yeah.
And it puts BMNR right at the intersection of everything that matters in tech right now. So for you, our mission today is to unpack why these two specific guests matter so much.
Yeah, what does their presence actually imply for this roadmap?
And crucially, what happens to BMNR's entire valuation story if they actually manage to pull this off, to merge the narrative of Ethereum with the narrative of OpenAI.
Okay, so let's start right there with what we're calling the power room. I mean, for a company that was, until pretty recently, a small cap player, getting Buterin and Altman.
It's not just networking.
No. This points to serious, multi-billion-dollar strategic commitments. This is about deploying real capital.
Absolutely. A casual appearance is just marketing fluff. But when you get these two in a room, it signals that real infrastructure is about to be built, that foundational long-term partnerships are being signed.
They're using the guest list to validate the sheer scale of their ambition.
So let's break down the two pillars here, starting with the crypto side. Vitalik Buterin. His presence alone, what does that confirm?
It seems to lock in their pivot to this Ethereum Treasury strategy.
It does. They're trying to fundamentally change who they are. They don't want to be a simple crypto miner anymore. That's a commodity business, right?
Yeah.
It's all about power costs and network difficulty.
And instead, they're becoming an ETH holding company that actually generates its own cash flow.
We've seen this playbook before, haven't we? This idea of becoming a public proxy for a digital asset.
Exactly. They are trying to become the proxy for Ethereum, just like MicroStrategy became the go-to proxy for Bitcoin.
You're buying exposure to the asset, but you're doing it in a regulated, publicly traded company. It's a much easier vehicle for big funds.
But having Vitalik there has to mean more than just a nod to them holding ETH, right? Yeah. What's the operational validation we should be looking for?
It's twofold, really. First, it's validation of their staking operations, which are huge. And we'll get into how that generates their cash flow in a minute.
Okay.
And second, it's likely a signal of strategic support for their work on Ethereum's Layer 2 infrastructure, the L2s.
Right. So for anyone listening who knows Ethereum, but maybe not the deep tech side, can you just quickly unpack what Layer 2 means here?
Sure. Just think of the main Ethereum blockchain as a really busy highway. That's Layer 1. L2s are like these super efficient express lanes next to it. They handle transactions faster and cheaper, then settle the final results back on the main highway.
Okay, got it.
So if BMNR is building the physical hardware, the data centers, the cooling systems to run these critical L2s, having Buterin there is basically him saying, yes, these guys are a legitimate and integrated part of our ecosystem. It's world-class credibility.
That makes a ton of sense. So let's pivot now to the AI pillar. This is where the story really gets wild. Sam Altman. What's the connection between the CEO of OpenAI and a crypto cooling company?
It's not obvious at first, but it comes directly from Bitmine's core technology, their specialty.
The immersion cooling.
Exactly. This isn't just your standard air conditioning. They literally submerge the hardware in a non-conductive liquid. It's the only way you can efficiently cool these massive, dense computing clusters that you need to train high-end AI models.
Which is the biggest bottleneck in AI right now. The compute power needed generates so much heat.
An incredible amount of heat. So Altman's presence is the strongest signal you could ask for. It means Bitmine's data centers aren't just for staking Ethereum anymore.
It suggests that infrastructure is being repurposed or expanded.
Rapidly. To provide compute power for OpenAI or, similar advanced AI models, their hardware expertise is now dual use. It serves both DeFi and AI.
And that's where I want to just pause for a second, because the difference in the revenue model here is what makes this so explosive for their valuation, right?
That's the absolute core of it. A crypto miner is valued on the price of the coin and how efficient they are. It's volatile, it's cyclical.
So you get these low cash flow multiples, like 5x earnings maybe?
Exactly. But an AI infrastructure provider that's valued on predictable, long-term, high-margin contracts. It's almost like a SaaS business.
SaaS-like, as in subscription revenue.
Precisely. We're talking recurring revenue streams, a subscription for compute power. And analysts value that on forward-looking growth multiples. We're talking 15x, maybe 20x earnings.
So if BMNR announces a big AI compute contract...
The valuation models have to be completely rewritten, literally overnight.
Okay, so that explains the star power. Now let's get into the substance. Tom Lee is set to unveil this 2026 roadmap, and it's built on 4 pillars that all lean on this Buterin and Altman validation.
Right, let's dive into those pillars. Pillar 1 is the most immediate one, aggressive ETH accumulation. This is why Lee was pushing so hard for that shareholder vote.
He wants the ammo. He wants to raise cash and then use that cash to buy up a ton of Ethereum before the next big market move.
Yeah, turning a balance sheet event into an asset grab. But the real genius is in Pillar 2, which is staking yields.
This is the internal cash machine.
It's the engine that makes the whole thing work. They're aiming for massive daily passive income just from staking their ETH holdings.
And the numbers in the source stocks are projecting over $1 million a day in passive income.
Which is a staggering number.
So why is that so important?
Because it makes them operationally independent. Think about it. $1 million a day covers all your internal costs, your energy, your staff, data center maintenance, all of it.
Without having to sell their core assets, their ETH.
Exactly. It creates this internal corporate dividend that funds everything and shields them from market volatility. That's a huge strategic advantage.
Makes them way less dependent on the crypto boom and bust cycle.
And that stability is key to getting those higher valuation multiples we were just talking about.
Okay, so moving on. Pillar 3 is the big tech pivot we discussed. Immersion for AI. This is the Sam Altman link.
This is them officially saying, we are more than a crypto company. They're refocusing their core technology, the liquid cooling, to go after the AI compute market.
And grabbing those high-margin AI contracts.
Right. And then finally, Pillar 4 ties it all together, treasury expansion.
This is the complete identity shift.
It is. They're strategically moving beyond the miner label. They want to be a diversified asset holder. Their balance sheet will have tech infrastructure, the AI data centers, and strategic digital assets, the income-generating ETH treasury.
So we have to talk about the one thing that underpins this whole plan, that authorized share expansion vote. Lee was calling for shareholders to vote before January 15th. The timing is clearly critical.
It's super critical, and it's contentious. Shareholders really have to weigh 2 very different views on this.
Let's start with the traditional knee-jerk reaction, the bear view.
The bear view is just straight out of Finance 101, dilution. The company issues more shares, my slice of the pie gets smaller.
It's an immediate cost to me, the shareholder.
A very tangible cost. And it's a valid concern. But then there's the compelling bull view that BMNR is trying to sell with this huge meeting.
Which is?
That this short-term dilution is the price you pay for a massive long-term gain. They're clearing the runway to raise billions of dollars.
And that capital gets deployed into acquiring appreciating assets like ETH and building out that high-margin AI infrastructure.
And this is where the guest list makes the bull case so powerful.
Right.
I mean, you don't bring in Vitalik Buterin and Sam Altman to ask for a few million bucks.
No, the magnitude of the event has to signal the magnitude of the capital raise.
Exactly. This vote gives them the ammunition to execute on all 4 pillars, to buy the ETH, secure the yield, and build the data centers for those AI contracts.
So as a shareholder, I'm being asked to trust that the new, bigger pie will be so much larger that my smaller slice is actually worth way more in the end.
That's the bet.
Thanks for watching. If you found this helpful, hit that like button and subscribe for more.